shake. Every particle is from the center on the arc without a start or a finish. Line on loop, cats waiting, freight trains runs unabated. Views vanish from my point vantage. Passages come in and out the way I recall your antics. Still alive cause I said it. Life of its soul unless we did it. To the see your name in credits. A labor of love, you mean slavery. Surely it's been a quite savory. Crepe on the back of the verbal alchemy. Pure magic when she touches me. I read that love is kind but it's also blind. Of any style you profess, would you be my guest? Happiness is a hot potato that you can't possess for long. Just pass it on like a song. I might look calm and collected at a glance, but I taste the void when I'm not connected to the world kinetic as opposed to static. Idle hands a workshop of a digital addict. On the hot street for inspiration is key to feed the mind in need of stimulation. Elevating music to the space station. Penthouse of stars to blaze it. After 6 comes 7 and 8. Access code to the pearly gate. This AM can wait. In the speak of fate. A finale to a play from a maker.
Hello everyone. How's everyone doing? Hope everyone's well. I'm going to try this again. This is pump watch number 2. All right, and if you missed the first one, this is essentially just my delivering the regular show's content in a live format, but with a little less structure. I mean, I don't typically have as much structure. It's off the cuff, but this is different because it includes your live sort of questions, reactions, my reactions to, you know, whatever you guys are saying live. So it's just a different format. And the goal of Pump Watch is to actually watch a pump, something that we haven't done in a very long time. So I'm trying to see if I can catch one of these moves, because it's nice watching the market move in your favor, but it's even nicer, in my opinion, watching that in a group setting. So that's Pump Watch. It's just a series of fun little live streams that hopefully we can enjoy during the course of this bull run. All right, so yeah, just sit back and enjoy. I'm not going to make it too sort of long-winded. I'm gonna try to still, despite being live, keep it substantive. All right, let me just have a quick look at the stream, just to make sure everything's going right. Let's see. All right, so I see all right, I think we're good. There's something up with my messages, but I'm gonna check on my phone. I'm gonna be checking your messages on my phone, but for some reason my computer's not showing me the messages that I'm seeing on my phone. It's all right. I can still see your messages. It's just gonna take me a bit because I have to look over on my phone. All right, let's get started with Bitcoin's analysis. All right, so this is very much along the lines of my analysis for the past few days. The fact that you're looking at a range of price action right here. And if you recall, we are in a 90-day channel. We're still in that 90-day channel, 90 plus days, actually. So let's see. It's actually 100 plus days. Hey Dreamstorm, hey Cliff BTC. Yeah, no, Pump Watch, Cliff BTC, Pump Watch. That's what it's called, Pump Watch. We're looking out for a pump. I'm miffed that I can't see your messages on here. Let's see if I can't fix that. It's kind of annoying, but it's not the end of the world. Oh, yeah, I see it now. I see it now. All right, cool. Just needed a refresh. So, yeah, Cliff BTC says, we on pump watch still, or are you expecting a dump now? And I'm totally expecting a pump. That's why it's called pump watch. All right. So we're looking for that pump. And let me see. I just clicked that. One sec. It's been a while since I've done this, so it's... Yeah, there we go. I'm getting the hang of it. It's been a while. All right, cool. I think I remember how to do this. All right, let's get going with the analysis because I hate live streams that go on forever. Did I clear that? I did clear that. All right, so you're in this 100+ day channel right here. That is the context. Always want to keep the higher time frame context, higher time frame analysis, because that really, it gives you good results with a high degree of probability regardless of what's happening on the small time frames. The high time frame analysis is very informative. And that being said, there is a lot of staying power here. When I'm saying staying power, I mean there's no reason for us to just leave this. And if we're to leave this 100-day channel, we're going to do it in the way that channels break, right? So that being said, don't expect much of anything from Bitcoin just to fly out of 100 days of resistance. In a lot of ways, you can look at these channels, any channel, as a resistance, a level of resistance. There's so much going on for 100 days. People have been buying and selling, buying and selling, buying and selling, which makes for slow movement, matriculation up and down throughout the channel. Okay, so right now you are not at the bottom of the channel, you're not at the top of the channel, you're kind of in between the bottom and the midline. And my analysis the past few days was you're going back to the midline. That's my 116 target. And the reason I gave for that analysis was some fancy Elliott wave corrective dynamics where I'm seeing a nested flat correction where you have the simple flat right here, right? So this simple flat in teal, which is the B wave or counter correction to this dump of October 10th, yeah? But within that, you now have a flat correction within a flat correction. So this, I think, is where we're at. We're in this, the B wave of this yellow correction, okay? And so that was my thesis, and it looks to be playing out because it looks that it seems as if we're targeting the top of this B wave, which is basically the midline, the next logical resistance for Bitcoin, which is around 116, okay? And then after going up, we need to go down to complete this yellow correction. So I'm expecting something like this, okay? Go up, finish the move up at 116, go down, finish that B wave, and then go back up to complete the teal correction, and then you finally leave the channel. And that's how you leave a channel. You have to retest the midline as resistance if you're gonna break down from it, right? For people who are bullish on Bitcoin, still for some reason you're bullish on Bitcoin right now on the high time frame, you would need to do the following. You would need not just to break up to 116, but to break all the way up to 124, 123, 124, and then to retrace back to 116, make previous resistances new support, and then leave the channel from there, okay? And if you're bearish on Bitcoin on a higher time frame, you're expecting, like I said, going to 116, rejecting at 116, which is the midline, and then coming back up, testing it one more time, rejecting from it one last time. And the only reason you're doing that dance is, as I've described, due to the fact that you're in the nested flat correction, right? This is the B wave of this larger correction. And so you finish the B wave by going up and then down and then back up to finish the original flat correction. I hope that's not too confusing. I think it's pretty straightforward, to be honest. The take home is Bitcoin doesn't have far to go. It's what, 4:13 on a Friday afternoon. We all know the market closes at 5 p.m., 5:30 p.m. Eastern Standard Time. There's no more liquidity. It's unlikely that we get big moves in Bitcoin after market close. Just unlikely, right? I'm not saying impossible. You can find examples of that throughout the charts, but it's unlikely if you just go through Bitcoin's price history throughout time, throughout the past 12, 13, 14 years, or 13 years, however long it is. You'll see that after the close of business, you know, there's a reason the traditional market liquidity exists and is so correlated to Bitcoin's big moves. And after they're closed, there's a reason Bitcoin doesn't typically do much of anything but correct sideways, okay, and slightly down or slightly up. So this is what you should expect, underwhelming price action from Bitcoin. But that's not why we're here. That's not the pump watch. The pump watch isn't some modest 4 or 5% move in Bitcoin to the upside. That's neither here nor there. And if we're going to do that towards the close of business, we should expect it to be retraced upon when the market opens back up for pre-trading on Sunday evenings. Okay, that's not the story here. What we're expecting is a 10 times that, or a times 10 move. So if Bitcoin's to move 5% to the upside, we're expecting a 50% move in aggregate on altcoins, which is what we're really going to analyze and look at today. All right, the last thing I want to say about Bitcoin is this. Remember, you have these lunar cycles. I'm going to turn on this indicator really quickly. You have moon phases, which play out with the high degree of probability, right? Nothing's 100%, but with the high degree of probability, whenever you get a new moon, right? And the new moons here are the blue. Yeah, the new moons are the blue circles, and the full moons are the white circles. New moons typically designate local market tops. New moons, local market tops. Full moons, local market bottoms. The most recent moon phase was a new moon on the 21st, I believe. We are currently the 23rd or 24th. What are we? We're the 24th. We're the 24th. Okay. The data shows, and this you can pull up, 50 plus years of research shows that financial markets typically top after full moons 0 to 3 days after the lunar event. They bottom after full moons 0 to 3 days after the lunar event. Right now, if you look, the past lunar event was the 21st. That's day 0. Day 1 would be the 22nd. Day 2 would be 23rd. Day 3 would be the 24th. You should expect at the latest, if that high probability, market phenomenon were to play out, that we get a local market top today. And that's what I would say is a likely scenario. I'm saying it's a likely scenario that we already have that new moon right here. That this new moon show a local market top, not just right here, but again here. Okay, at this level, and this level is the next logical resistance, the midline of the 100+ day channel. That's what I'm expecting, a retest of this local market top right there. Okay, so that is interesting for those of you who follow that, and I know some of you do. All right, let me take a short break and look at the comments, and then we can move on. Okay, so Sergio says, Hola, Dean. Hey, Sergio. Adonic Office says, hello, so Q4 alt season? Yes. 6473N64M19, goodness, come on, says, what do you make of the 4-year cycle thesis? There's no such thing. I've talked about it before. From listening to you a while and you saying Bitcoin is about to end its bear market, it appears that you aren't into cycle theory. There's no such thing as a cycle theory when you're talking about 12 years of data. Like, you have, for you to get any meaningful data and say there's a cycle, you have to gain some perspective. And to gain perspective, you have to zoom out. And to zoom out, you have to understand that Bitcoin's only been trading for about 12 years. And so there's not much of a cycle to speak of. And anything you're looking at myopically, because you have to understand financial cycles, even in crypto, sometimes take years. And you can see, entire bear market cycles. Like, for instance, let me just give it a quick, dirty, straightforward, clear example. The last time we had a bull market like the one we're about to get, or the one we're about to start with altcoins are about to, initiate, was 10 years ago. I understand the last time we had an alt season, technically, was 2020. 2020, there were select few altcoins that ran up, okay? And I called it a mini bull market because Bitcoin ran up just a little bit. And it wasn't in a full... I can digress and talk about that, but the screen would be too long. Basically, what happened in 2020, pandemic lows in March, I believe, Bitcoin ran up. If you look at the structure in Bitcoin's price action, you're looking at the B wave of a corrective running flat. So basically, you're looking at an up and to the right move in the context of a larger correction. So it's corrective price action, but it's up and to the right, and it's impulsive because it's the impulsive portion of a B wave. Okay, that's what Bitcoin did. But then at the same time, in 2020, you had the Cardanos of the world. You had other select altcoins with large market caps that put in proper bull runs. When I say proper bull runs, I mean they went up 100 plus X. But that was relegated to a very select number of altcoins in 2020. So that was an alt season, but not really, to be honest. If you look at the entire life cycle of what Bitcoin's given you, and when we talk about life cycle, when we talk about cycle, a lot of these terms, like the cycle, that is a direct reference from Elliott wave analysis. That is a measure of a degree in Elliott wave analysis. You have a cycle, you have a super cycle, and then you have a millennium cycle, right? Study Elliott wave analysis. Don't let people tell you what shit means without you're doing your own homework. That's the crux of do your own research. When people tell you about super cycles, they're literally referring to a term that we use in Elliott wave analysis, but they have no idea, most of them have no idea what they're talking about. So when you talk about a cycle, I understand the word cycle, what it means in regular parlance. But when you talk about it in technical analysis, that's a direct reference to a degree in Elliott wave analysis. And so when you look at Bitcoin in its entirety from 2008 or whenever it started trading, 2008, to present day, 2009, 2010, whenever it started trading, you're still in your first super cycle. You're probably in like cycle wave 3 or 4 or something like that. You're in cycle waves. So basically cycle waves, basically you're talking about Elliott wave analysis. You're looking at, what people love to reference, these moves, these 5 waves up in an impulsive progression. So when I talk about degrees, you can look at it on the 1 minute time frame, you can look at it on the 1 month time frame. When you look at it on the 1 week or 1 month time frame, you're generally referring to cycle waves. So the cycle is the high time frame view, the life cycle of the asset. When you're looking at a small time frame, you're probably dealing with like a minute or a primary wave or something like that. Do you see what I mean? Like, let me just show you really quickly what I'm talking about. Just go in TradingView, pull up the Elliott wave tool for impulses, and you can go and check degree, and you'll see what I'm talking about. You see what I mean? Like, based off of the time frame, based off of your measure of counting, you can talk about primary. So like a proper Elliottician will be like, oh, I see this asset being in primary wave 3 of cycle wave 1. So that's how we talk, so that like, you don't just say wave 3. That doesn't mean anything. It's like a map. It's like a reference of where you think the asset's at. And piggybacking off of what I said in the previous episode, every single asset has its own cycle. Every single asset has its own market phase. Please understand that. That's so useful. You're so lost. You're irretrievably lost if you think everything's moving in the same way at the same time. You will be so lost. You will be so lost. Nothing makes sense. The second you understand everything has its own cycle, yet and still, as Bitcoin trends, everything moves up, then everything's so clear. You have hope of understanding what the hell you're looking at and what these assets are doing, and how Bitcoin could be bearish on a high time frame, but altcoins could be bullish AF. You can understand that, and how some altcoins are super bearish, although they were really bullish, I don't know, a few months ago. Yet others are really bullish. Yeah, and still Bitcoin still sets the trend. All those things are not they're not contraindicated. They don't refute one another. So you see here, talk about cycle waves, talk about super cycle waves. If you want, study Elliott wave. You don't have to, but when you study it properly, and very few people do, you understand what the hell you're talking about. So the idea of something that just came out 10 years ago doesn't seem like, oh, it's been here forever. Just because some of you are 18, 19, and Bitcoin's been out most of your lives, it doesn't mean it's a mature asset in the sense that it's been around long enough to start talking about cycles. Yes, there are cycles in Bitcoin. Let's just look really quickly. I do not want to get lost in this because that's not what I want to talk about today, and I don't want to make the stream too long. But looking at Bitcoin, we can see really clearly. I just want to show you this really quickly. Let's go on the weekly time frame, right? So again, this is the index chart. So you're seeing Bitcoin from a penny, essentially. Let me clean that up. I hate these little marks. Okay, so you can see Bitcoin trading from 0. I'm correctly toggling my log chart. You'd be surprised how many people do analysis without the log toggle. I mean, you can't even look at it properly. It's an impulsive, sort of exponential increase, so it has to be reflected on a 2D plane with the log chart, or else you can't adequately see what is going on. In any case, do you see when we're talking about Bitcoin, the cycle waves are the teal. Cycle wave 1, I believe, ended in July of 2011. Okay, I think you have cycle wave 2 ending in October of 2011. Okay, I think you're still in cycle wave 3. I think Bitcoin's in cycle wave 3, right? So you see the teal, it's in cycle wave 3. When you're talking about cycles, that's what cycles make sense. Do you understand? Like, the assumption, please understand the absurdity of what you're alleging. You're alleging that Bitcoin just does this, or any asset that's traded on an open market does something like this. Every single time it does the same fucking thing. It goes up and goes down. It goes up and goes down. It goes up and goes down. And it goes up and down in the same way. It doesn't make any sense. Nowhere in history. And forget Bitcoin. Like, think about what you're saying, and then I want you, please, Forget what everybody's telling you. Challenge yourself. Try to pull up an example if you think what you're saying makes sense. And I'm not attacking you. I'm just saying, like, a commonly held belief. If you think it makes sense and you want to ascribe to it, try and see an example of it in anything at any time in history. You know, pull up another asset that's openly traded on an open market, like gold or silver or whatever, like tulips. How did they trade? Is it like that? Can you talk about a cycle like that? What does it mean? The whole idea of a cycle. See, this is why it's such a hard discussion, because the terms y'all use don't even make sense. Like, you first have to define the terms, and then you have the argument with, you know, both parties or all parties having a common understanding of the terms being used in the discussion. The idea of what you think a cycle is doesn't even make sense. I want you to attack the ideas that you have and that people give you with that kind of ferocity, with that, put it in the light. That will make your trading so much easier. That will make the ideas that you get so much more clear. And that'll reflect in your portfolio, I promise you, because when you have such skewed, nonsensical ideas, you can make money, but you trip and fall into profits. You trip and fall into profits, and we all do at some point in time. But, like, please understand that yeah. Anyway, I don't want to talk too much about this because it's not the subject of the stream. In any case, I hope that makes sense. And again, it's not a personal attack. I have nothing against you. It's just the idea. The idea is garbage. The idea is garbage, and I hope you can see that the commonly held belief of the cycle, the 4-year cycle, it's garbage. And most of it comes from, if you have to know, the approximately 4-year halving that's coded into Bitcoin's algorithm. And people use that and conflate it with Bitcoin's actual trading cycle, because they can see that every 4 years, approximately, the demand, the supply is halved, and so there's some buying pressure that's created, which makes the price go up and to the right slightly. But then you have to discriminate up and to the right slightly and up and to the right parabolically, right? What happened in 2020 discriminate from what happened in 2010 or 2015. Massive difference. It's not even a discussion. Just go and look. Don't take my word for it. Just go and look. All right. That's enough of that. So let's see. Okay, so I answered that, I think. Duke X93 says, not sure about that high probability we can see the full moon on local top here instead of bottom. Full moon on local top here. No. Full moons are local bottoms. The 21st was a local, the 21st was a new moon. So we're looking for a local market top. All right. DJ Gizmo says, hi, what's up? Sergio says, yep, aside from the last full moon, the moon phases had high success rate. They always do. I mean, statistically. And when I say statistically, again, get out of Bitcoin. I'm not asking you to trade stocks. I don't touch them with a 10-foot pole. But when you're doing your research, when you're spouting ideas, understand that these ideas should, if they're cogent, they should be applied to other markets. You should be able to see their effect in other markets. So when you're looking at moon cycle theory, yeah, the 50 plus years of market research that went into saying this is a thing, it wasn't necessarily just taken from data in crypto, because it's 50 plus years worth of data, right? Looking at cycles in 50 plus years worth of data. Please don't restrict yourself in your research and your market research to just crypto if you really want to understand how markets move. Dreamstorm says there are 3 sides to 4-year cycle is intact. 1, 2, it's going to be an extended cycle with 2026 bull. 3, the 4-year cycle is dead. Each side screaming their thesis has only caused confusion. Yeah, see, that's what I'm saying. There's so much confusion. 4-year cycle is intact. What 4-year cycle? Show me the 4-year cycle. Like, from as an analyst that, you know, frequently looks at, you know, 60, 70-year charts, what 4-year cycle? You know, you guys have no perspective whatsoever in crypto. And I'm in crypto, and I'm saying most people in crypto have no perspective on any market whatsoever. They think like 12 years is like a super cycle. It's like, no. Actually, 12 years can be a super cycle, but they don't even know what a super cycle is. They think going up and not correcting, which has never happened in the history of anything. But that's what a super cycle is called, or whatever. I don't know. It's going to be an extended cycle with 2026 bull. Like, what the fuck does that mean? I'm sorry. It's so frustrating. It's just so nonsense. There's just nonsense. Just people throwing stuff out. No definition of terms. No substance to the ideas. It's just like, oh, this happened last week, so we're expecting that to happen again. It's like, okay. Each side screaming their thesis has only caused confusion. I'm not screaming at anything. Well, maybe I am, but I don't even watch half the shit you guys watch. I promise. It's a waste of time. Rob Story says, on what alts are you betting on possible alt season? So yeah, Rob Story, that's something I work with my crypto portfolio mentorship and consultation service. I work with clients specifically on which altcoins are prepared to initiate the cryptocurrency bull run of 2025, which is going to start in 2025. I think Bitcoin starts probably towards the end of the year, maybe early December, late December, something like that. That's my best estimation, and that timing I'm getting from looking at the US dollar currency index, because both Bitcoin and the US dollar currency index are correlated, but inversely so. And typically, if you just look at the US dollar currency index, you can see that it's going up correctively, and it should reach its target in and around late November. Or is it early November? I forget. Something like that. Early November or late November, something like that. So that's the only reason I say that. Yeah, for what specific altcoins, I would say just order single asset analysis, or, you know, join the crypto portfolio mentorship and consultation service. And that's actually really important, because not everything's going to run. As I said, everything has its own cycle. Everything has its own phase. Yeah. Okay. Hey, Dylan, what's up? So Salbogat says the retailers get goaded by the whole 4-year cycle non-test propaganda. It's hilarious. It just doesn't make any sense. These people don't understand. Yeah, I don't think so. What about liquidity cycles? Is that a thing? Everything's a cycle. The seasons. You have climate cycles, geological cycles. Everything's a fucking cycle. I mean, this is why we can use Elliott wave analysis and use Fibonacci, because we see these patterns, these cyclical patterns in nature, in our financial markets, in our seasons, in the patterning of a leaf, in butterfly wings, and all that kind of stuff. Everything's a cycle. There's cycles everywhere. I mean, liquidity cycles, everything's a cycle. It's just a question of what you're looking at and for what purpose. So let's see. 6473N64M19 says, well, that was pretty brutal. Dude, it's not at all a personal attack. Not at all. I'm attacking the idea. I'm here to learn. After all, I reference a lot of different resources and many espouse this theory, so I simply wanted to get your stance. It has nothing to do with a personal attack. I have no ill will towards you at all. 6473N64M19 also asks, also, I would want to know if you believe a major catalyst is needed for alt season, or is it just baked into the chart, since you loved my last question so much. Dude, I have nothing against it. It is kind of annoying because I think the idea is trash, And I feel like there's a lot of intelligent people in this space, but there's no critical thought. Like somebody with a lot of viewers, with a large following, feeds the masses something, and everybody regurgitates. And it's like, guys, what happened to critical thinking? What happened to independent thought? What happened to, like, questioning stuff? I just don't get how so many people are just like, okay, 4-year cycle, and it's like obvious. It's obvious. Like, we have the internet, we all have all of these resources at our fingertips to do research and, like, try and figure things out. At least ask the question, like, is this even valid? But, like, people don't even ask the question. Oh, it's obvious. It's a 4-year cycle. It's like, that gets me. It's like, why is everybody falling asleep on this? I'll answer that real quick, and then I'll get back to the analysis. So Shoyo says, how is Steve Sinclair's book compared to Prechter and Frost? Steve Sinclair's more straightforward. If you pick up Prechter and Frost and you have no background in Elliott wave analysis, it's just, you're gonna put it down. It's gonna be boring. Most people, I'm not gonna say, I think most people would just find it. You can't absorb it. It's just too much. It's too much. It's too much to absorb, and you're like, what the hell are you talking about? You have no reference. It doesn't make any sense. Steve Sinclair is a great primer, and it gets you thinking in terms of what Elliott wave analysis is and how it's used, how it's traded, how you trade with it, all that stuff. And it's short and it's sweet, and it basically gives you the basics. Prechter and Frost are going to go into a lot of detail that you're just going to go down a rabbit hole, and you're going to be like, I have no grounds for understanding why this is even important. What the hell are you even talking about? They're talking about a really minute, like, aspect of, I don't know, timing, wave 1 and 2 and all that stuff. And you're like, why is this important? Or like a fib extension, and or a running versus expanding flat, and how to identify them in markets, and how you can see them in the Japanese forex market, and you typically see this pattern here or there. You're just gonna get lost. Prechter and Frost is like, the detail after the primer of Steve Sinclair. That's at least how I look at it. Rob Story, do you trade futures leverage? Yeah. Can you show positions, how you open trades based on Elliott wave? Nope. Or at least some zones based on waves? Nope. I don't do that for a lot of different reasons. I just share the analysis, and then I trade spot with clients. That's all. I'm not promoting trading futures. That's a whole nother beast, and this channel isn't about that. I don't talk about trading strategy because it's a whole nother monster. It's not bad, it's just not what I do. I'm really into just the technical analysis bit, and I think if you're into trading, there's tons of resources outside of this channel. Sergio says, seems like the Fed is slowly getting closer to starting the printers, which in theory, but that usually happens after a financial crash. How do you see this playing out with your overall thesis? I'm not looking at that. You know me. I'm looking at what's in the charts, and everything should be within the charts. I'm not waiting for some external event. The external events are, in my opinion, like precipitating causes, but a precipitating cause needs a foundational sort of setup. So I'm analyzing the foundational setups, like, the ground with which everything sprouts, and then whatever happens, if the sun comes out that day and it happens to rain, and then things take off. But I'm not concerned with what the Fed's doing or what the Fed's not doing. All right, let's answer that one question about the major catalysts, and I guess that dovetails with what Sergio said. Okay, yeah. So this question, and then I'm going to get back to the analysis. If you believe a major catalyst is needed for alt season, or is it just baked into the chart, since you love my last question so much? So this question is something I've addressed before, but I'll try and address it, and I'll try to be brief. The events, just like I told Sergio just now, are important, but they're only important insofar as they're the precipitating cause for something. And a lot of times you'll see like a Fed announcement, some sort of, you know, news event, something, anything will get the market spiking. And typically in Bitcoin, the way we see this is the dollar does something and then Bitcoin does the opposite. And the reason we see that is that most of the liquidity that you see in Bitcoin comes straight from the US dollar. It's counter to whatever the dollar does. So if the dollar goes up in relative value that you see on the US dollar currency index, Bitcoin typically goes down. And then if the dollar goes down in relative value, Bitcoin typically goes up. So when we see one of these events in the general economic markets or in, you know, worldwide news, and it causes a reaction in the US dollar currency index, and remember what the US dollar currency index is. It's not just the US dollar in a vacuum, but it's the relationship of the US dollar to a basket of world reserve currencies. I think 6 or 7, right? Like the French franc and the British pound and, you know, the Japanese yen and the Chinese yuan and so on and so forth. And so when you look at the dollar versus those, is the dollar stronger or weaker? Stronger or weaker? And so news events and different Fed pronouncements makes the dollar relatively stronger or weaker based off of that movement. But in the same way, you can zoom out on the US dollar currency index chart and you can see the dollar index and what it's likely to do. Let's just do that really quickly and then let's get back to altcoins, or get to altcoins, because it doesn't seem like we've ever gotten to altcoins. And I do want to get there. I want to talk about these altcoins pumping, or at least looking at them beginning their pump. All right, let's just look at the US dollar currency index and then we're going to get to altcoins, because I don't want to give misleading information, say I'm going to talk about this and talk about other things the whole damn time. Let's do, it's here. Okay, so it goes back to what I said. So why am I saying, somebody asked about like when I expect Bitcoin to start its bull rally, right? Because I'm claiming that Bitcoin's at the end of its bear market, okay? And that its bull market should start after most altcoins, but that should begin towards the end of the year, you know, maybe late November, early December. Anyway, you can see this is US dollar currency index. Again, it's the basket of world reserve assets. And why is it important? Why do we look at the USDXY when we're trading Bitcoin or trading cryptos? It's because this is the liquidity. When we talk about liquidity, we talk about the relationship of Bitcoin or any crypto, generally speaking, to traditional markets. This is the chart you want to look at, not the stock market. Both Bitcoin and the stock market run off of this, the dollar that's used to buy stocks, the dollar that's used to buy Bitcoin. This is the chart you should really understand. And again, if you zoom out, you can see since 2008, we've been in this super cycle. This super cycle is complete. Okay, and I'm using the term technically. Again, you see cycle waves 1, 2, 3, 4, and 5. That's a 5-wave Elliott wave impulse. Okay, and you can count them, you can measure them. Everything from this, like if I say it's 5 waves, if you understand Elliott wave analysis, there are ways to identify waves. So like typically wave 2 comes between 0.5 and 618 of wave 1 and takes around the same time as wave 1 to form. And that's exactly what you got. So wave 1, wave 2, that's likely it. Wave 3 is about 1618 to 2 Fibonacci extensions of wave 1, retracement of wave 2. That's exactly what you got. Wave 4 is typically a 236 to 382 Fibonacci retracements of wave 3. That's what you got right here. So that's a wave 4, and wave 4 is typically a complex flat correction. That's what you got. And then wave 5 is a final wave up, and it's typically 618 Fibonacci. What is it? If you take wave 3 retracement of wave 4, I think you get 618, so 61.8% up of wave 3 retracement of wave 4 for wave 5. And then the other way to measure wave 5 is taking the inverse of wave 3 and then targeting 1618 or something like that. I forget. In any case, that's all in Proctor and Frost, and the Elliott waves made simple. You understand that. You even forget the rules because you just do it. And then you identify with a high degree of probability your waves. So that's what Ralph Nelson Elliott said. These are how, this is an indicator. This is a US dollar currency index. It's not, yes, it's the US dollar, but it's more conceptual. It's like a conceptual thing. Because it's not the actual, it is the actual dollar, but it's the idea of the relative strength of the actual dollar. So you can even apply these Elliott wave concepts to these financial concepts, and it works because we still think in terms of, when you're buying and selling dollars, this basically encapsulates human behavior and how we think of the asset that is the US dollar. Whether people want to buy it and sell it, when they want to buy it and sell it, how much they want to buy, how much they want to sell, when they think, they should sell it, when they think they should buy it. In any case, you see that 5-wave super cycle, 5-wave cycles, which 5 waves of a cycle makes a super cycle. So the US dollar, I'm going to use the term very technically, the US dollar was in a super cycle from 2011 to 2022. That's an 11-year super cycle. Okay, this is a super cycle. 11 years of 5 waves up and down. Okay, we have yet to complete a super cycle, not one, in crypto. Not one. The closest to completing a super cycle are going to be Bitcoin, Ethereum, XRP, Litecoin. Okay, those are the first that are going to complete an actual super cycle. And then we could do exactly what we're doing here. And we can look back and say, oh, that was an 11-year super cycle. And that basically says 5 cycle waves make a super cycle. Now, what you're going to see is, since you saw 11 years of this super cycle in the dollar, and actually, this is really interesting because this 11-year super cycle for the dollar, that mirrors a lot of what the 11-year super cycle in Bitcoin gave you. Bitcoin gave you not a complete super cycle, but basically Bitcoin gave you what it's given you up until now within the dollar's 11-year super cycle. Now what you should expect is an 11-year super cycle for wave 2. So super cycle 2 for the dollar is going to be just like, very straightforward. Right here, you can take your Fibonacci retracement tool from the bottom of super cycle 1, or it's not super cycle 1, but let's just say from the bottom of this super cycle of the dollar to the top, you should be able to count a wave 2, super cycle wave 2, that should take you 11 years. So if it's 2025 right now, we're looking at 2036 to be the end of wave 2, super cycle wave 2. Let's just call it super cycle wave. I know there's stuff going on there, but just for all intents and purposes, we're going to start here. That's not how I would do it if I was doing a proper analysis of the US dollar currency index. I would go from the very beginning and I would count, what super cycle this was. But let's just say this is super cycle 1. This would be super cycle 2 right here. Boom, boom, boom. And I'm expecting the dollar. Basically, what I'm trying to say is this. I'm expecting the dollar to give me a super cycle wave 2, which essentially takes it down 62% of the way. But in so doing, it's going to give me the requisite A, B, C. Okay? It's going to give me the flat correction that I'm expecting, a sharp, or actually, a sharp correction, which is probably going to be a flat, and this is the beginning of it, but it's going to take many years before going back up into super cycle 3, which after 2036 I would be extremely bullish on the dollar, which means I would be extremely bearish in crypto. I hope you guys understand now with some perspective. When you talk about cycles, that's what the fuck we're talking about. We're talking about decades at a time. Look at gold, look at silver. You understand cycles take time. And these YouTube shows, we, sometimes we give daily, we talk, for a few months, a few weeks. That's not it. Zoom out and understand. And the best way to get perspective is look at stuff like home prices adjusted for inflation. That's a 50 plus year chart. Gold, that's a 50 plus year chart. It goes back even further, but the good data is like 50 plus years. Silver, 50 plus years. Like, go and look at all that stuff. I'm not going to say the S&P. The S&P is a shit chart. It's really heavily manipulated. And when you study actual, when you go in Procter and Frost, they give you a lot of these high time frame examples of these charts where you can gain a little bit of perspective. What a super cycle looked like, what a cycle looks like. And then you start looking at crypto with a different lens. And again, you do want your gains like yesterday, but when you're doing your analysis, it's more measured, and it makes so much more sense. It makes so much more sense. You do not have to wait 20 years before you start understanding that these cycles take time. All right. So I said all that only to say this, to set this up. Why am I expecting the dollar to go up between now and November, December, whenever I said? It's because if I look at this, and I put this in a long time ago, this is an ABC flat correction, very, very straightforward zigzag, right? 5 waves up, 3 waves, 5 waves down, 3 waves up, 5 waves down. That's a typical LE wave correction. It's called a zigzag. I think this is a zigzag. So once you do that, your C wave is pure impulse. So the dollar from January, so the beginning of this year, just fell down. And I told you, and I claimed, and you can actually measure this, you can see it for yourself. On a high time frame, you take the US dollar currency index, you take Bitcoin, you superimpose them, you can see that more or less they're inversely correlated. But you can see here, from the beginning of this year all the way to present day, the dollar's just been dumping. You should say, oh, I assumed when I did this analysis at first, I was like, as soon as this starts, and I could see it happening, Bitcoin, crypto's gonna fly. I cannot see a crypto not flying while the dollar's dumping based off of the relationship I see, Bitcoin and crypto, or the dollar and Bitcoin having. But it only went to 120. And I say only because I expected Bitcoin to be properly in its bull run with this move. I didn't expect it to be stuck in correction still. And I also didn't expect altcoins to be stuck in correction, because I anticipated this move because it was very clear on the charts. Now, that's also to say that even though there's a correlation, sometimes there's a lag. You can see, typically, if this is pure impulse, which it seems to be, it's easy, relatively speaking, to measure this counter correction. So this is wave 1, this is wave 2. On a small time frame, you can call these primary waves, doesn't matter. But you can measure, and this is, one of the only times, if not the only time in Elliott wave, where you can actually give time measurements or time measurements for moves. There's 147 days from January to the what we would call the what's the term? Every time I try to think about it, I forget it. It's like the measured bottom. It's not the actual bottom, it's the bottom we use for measurement. Like I forget the term. And that is 147 days. we should then have wave 2 that lasts about 147 days, which takes us to the end of November. This is why I'm expecting the dollar to go up until the end of November, which is around the time I'm expecting the dollar to top here and then start going back down for this wave 3, which should be a massive drop, which should find Bitcoin going up and the rest of the crypto going up. See, that is a really great time to be bullish in crypto. But still, again, it's not perfect. I still say that these altcoins are going to front run this cryptocurrency bull market. That was a very long answer. I didn't expect to go that long. But I hope that was helpful. All right, let's get on with it. I want to get to the altcoin. I don't want to make this too long. Let's see. Let me clear that. Let's just see. Okay. Cliff BTC, these lives are lit, Dean. You need to do them more often since you can explain the TA. It's very educational. Oh, awesome. Yeah, they're just going to be too long. And, a lot of people, not everybody has so much time to go through all of them. And I'm talking about stuff, but sometimes I don't end up talking about what I said I was going to talk about, or at least not quickly. But yeah, they're fun. They're fun because I'm going to do it anyway. I do this stuff, when nobody's watching. Johnny's Game Hub says, it seems that since 2017, every BTC top marked the futures launch, ETFs launch, and if you draw a BTC parallel channel, it's actually gone down compared to before when it was just retail. 6473 says, I'm all in altcoins. When I'm talking about catalysts, I'm referring to like some sort of stimulus check like was given in 2021. That's the last meaningful pump. I digress, but I appreciate you as I have. Okay, cool. Yeah, so, that's the idea. The idea, 6473, is that the immediate cause, like the some stimulus shift or something like that, yeah, it can happen. But the analysis should, on the high time frame, just show you what's coming with a high degree of probability. Like, just like we're looking at the dollar right now, it doesn't matter what happens. It doesn't matter what anybody says in the White House or what the Fed says. As an analyst, it's going to go up. It's just, this is a double bottom right here, right? You don't need the immediate cause, and nor do you need exactly when this breaks up. As an analyst, all you need is to know the general direction. And yes, it's a luxury to know that, okay, I'm waiting for this to, go up, and I'm basically, since this is a wave 2 with a high degree of probability, I'm expecting this to top out around late November. But that's a great luxury. But as an analyst, you just go on the high time frames, you get the general direction, you lie in wait. Just like a good hunter goes in a tree canopy and knows with a high degree of probability that moose is coming, you just wait. You don't know exactly when they're coming, but you know they're coming. You just wait. And then once it comes, you execute. That's how I see it. I think the hunting, I don't hunt, but I think the hunting analogy works. All right, let's look at altcoins finally. I don't want to go too much. Okay, so let's go back on the 4-hourly time frame on this chart, and then let's look at altcoins. So the whole point of this live was altcoin pump. So that's what I'm talking about finally now. Hope the other stuff wasn't too, kind of off subject. But right here is what I see a breakout. So when we're talking about, and I guess this makes sense. So I've been talking about, this is breaking out, this is breaking out, this is breaking out. Why am I saying that? I don't know exactly when it's going to happen. This is why it's Pump Watch 2. Because the first time, complete failure. And I've actually been looking at this all year, waiting for a move. Because on the high time frame, you can see, when you zoom out on this chart, this others chart, when you zoom out on the total 3, when you zoom out on others dominance, when you zoom out on Bitcoin dominance, it's very clear on the charts that you're going to get this altcoin pump. But what's very difficult is to pinpoint exactly when it's going to happen, exactly the week or the month. You don't have that ability. Like I said, in all of Elliott wave analysis, the only thing I've come across that gives you a decent idea to time the market, and I've tried, trust me, I've tried using time fib. I don't even know where the fuck that comes from. I think they talk about it in Prechter and Frost briefly, but he pretty much says, I think Prechter says it's, there's no basis to say that, there's no good basis to say, oh, this time-based fib, and you can see the tool here, trend-based fib time, fib speed, resistance fib time zone. I never pulled that out because there's no science in it. There's no basis of this is when it's going to happen. Actually, if you guys, and everybody's different, but there's certain analysts that are drawn to Gann analysis. I've never gone too deep into Gann analysis for whatever. It just didn't speak to me as much. But from what I understand of it, if you're big into timing the market, like a witch, like a wizard, and you're big into the time component, you want to read Gann. Good luck reading Gann and making sense. He was so secretive. I think he's said to have died with some of the things he figured out in the market and coded some of his books. He's like, I revealed certain things, but they're in codes. It's like reading Da Vinci or something like that. Gann analysis, like a lot of the stuff in Gann, I've never touched all of this stuff, but like he was, and these are just tall tales maybe, or legends or something like that, but he was apparently accurate in timing events with like to the day, and like this is going to happen to the day, and that's pretty much what we all want to do, right? Ralph Nassau, it's just saying, okay, it's going in this direction and it needs to do this, and pretty much there's a time relationship between wave 1 and wave 2, but that's about it. Gann is like, no, that's happening on this day at this hour this year, and I can tell you in 10 years what's likely to happen and when it's going to happen and why it's going to happen, because I've seen these cycles and I've seen the light. And it's like you try to read his books and you're like, bro, what the fuck? Like, it doesn't even make sense, because he's like, yeah, I coded it. I'm not revealing this. I'm not revealing this to the world. If I did, it would destroy all markets. So if you're interested in that, Gann, but it's not something you could just pull up and like just understand real quick. It takes, like, you have to like sit with it and decode it. And I was like, I'm not going through all that shit. So Gann, if you're interested in really timing, apparently, and I don't know if this is true, he figured it out. All right. So anyway, what was I talking about? Yeah. So yeah, on a high time frame, I could see that this was a thing, that these altcoins were going to run. It wasn't a question of if, it was a question of when. I've said that many times. Now, on the smaller time frame, or on the 4-hourly time frame, I'm looking at whatever happened on the 10th. That gave us that capitulative bottom. And then, since then, look at what we've done. We've pretty much been in a down, in a triangle. It's kind of a triangle, kind of a, it's not a bull flag proper, because the flagpole is too long, and this doesn't touch at least 0.5 or 50% of the flagpole, but it's a kind of triangle accumulation, right? And this is clearly the resistance right here, and you're about to break out of that. That's pretty much it. That's what you're looking at when you look at altcoins, generally speaking. So, the best thing I can say in terms of timing is, okay, you've touched this resistance once, twice, 3 times. And that's typically the number of times you see tests happen in technical analysis. So I feel like that's the break of it right here, if it doesn't break down again, right? So that's the break of it. And I've shared my next likely target, but let me share my reasoning. So the next likely target is going to establish an uptrend. So what I mean by that is this. In a bearish asset, every resistance level is a rejection. And then you pretty much react at that level. Every resistance is a rejection. You react at that level. You break previous support. And then that previous support becomes new resistance. When you change trends and you go into a bullish trend, and I think that bullish trend started on the 10th with that capitulative flush. I think that was it for a lot of the bullish, altcoins. What you're going to see is previous resistance levels, which this clearly is, right? If you're looking at this chart, this is, again, the others chart. It's all the altcoins minus the top 10 in market cap. This is my next logical resistance right here, right? I'm looking. I see a double top here, another rounded top here. That's rounded top. That's rounded top. Both of these make a double top. That's the level, right? Something like that. It's not enough to meet that. If you're actually bullish, I said this and I wrote it to myself in my trading journal. The price will prove to you what phase of the market it's in. If it's bearish, the asset is going to do something like this. Oh, that's resistance. I'm sorry, I don't have the force, or I don't have the strength. I don't have the means to get through that. Oh, that was nice, but I'm sorry, I'm going to reject. It's going to reject at resistance. If it's bullish, it's going to take out the next logical resistance and show you, even if it retraces beyond it, it's going to show strength at the next logical resistance. Does that make sense? I've seen this time and time again. That's why I wrote it down in my trading journal. I was like, oh, I figured something out. Every time you see a properly bullish asset that's ready to continue pure impulse, it's going to treat the next logical resistance and take it out. And then even if it retraces back below, it's going to show proof of its bullishness. It's going to say, I do have the means and the resources and the buying power and the interest from people to actually go through that. And I'm going to do it. And that's how you can tell without, I'll say without a shadow of a doubt. I'm just going to say it. Without a shadow of a doubt. If you take out the last logical resistance and you show proof of strength, even if you retrace below it, I'm not talking about a full retracement. That's a swing failure pattern. That's different. I'm talking about no more than a 62% retracement, right? Then you can expect continuation. And when we're talking about the disbelief rally, understand what it means. Again, you're talking about a rally that most people think is going to do something like this or something like this. They're waiting for a failure of the auction, as they would say. Don't misunderstand. Some altcoins are going to do this. Others are going to do this. Okay. And then there's a portion of the last question that I didn't answer that I wanted to answer, but I forgot, but I'm going to answer now. So the question was, this, and I addressed it in part, but the last part of that answer is this. Study Wyckoff. This, I think, is one of the most useful things I've learned in technical analysis, period. I would consider myself expert in Elliott wave analysis. That's the tool I use probably the most. That's the way my mind looks and sees and thinks about price action initially, right? I'll look at support and resistance, granted, but I'll think mostly in terms of Elliott wave analysis. I won't pull up in my mind, a Wyckoff accumulation or distribution channel. It just, that's not where my mind goes. But I think the most useful part about Wyckoff is this that I'm going to say now, which many people don't understand. And it's a basic principle. And it's this. What makes the price go up isn't the fact that somebody just bought 5 minutes ago. What makes the price go up is what happened for the past however many days or years of accumulation. What makes the price go down isn't what somebody just decided to do 5 minutes ago or an hour ago. What makes the price go down is what people have decided to do in a distribution that lasts hours, days, years. And so this is why I'm always talking about these channels, because I'm looking in terms of, all right, if you're going to make a substantial move up or a substantial move down, let's just zoom out really quickly on this others chart. The idea is you have to have shown proof of exhaustion of sales, or in a move down, exhaustion of buying over an extended period of time. And the longer the base, the higher in space, right, for an accumulation. So although I don't think in terms of a Wyckoff accumulation schematic, I'm always looking at these channels and I'm looking, all right, since about 2022, altcoins have been doing the requisite accumulation to substantiate, to justify the kind of rally that I'm preparing for them to make. It's not some decision that one person takes here and there. Again, on the small time frames, it's different. Low liquidity assets, yeah, you can move them up and down on the small time frame. I'm talking about the type of price action that we're expecting over a long time, that, you know, gives you a bull market, that gives you a bear market. This is the precursor. This is the cause. That's the effect. So I don't know if that's where your mind was going on that question, but I think that's huge. And a lot of people don't get that really basic premise. And again, it's an idea that somebody's giving you, that somebody's offering, that maybe in some book. Prove it to yourself. Look at every bull market you could possibly get your hands on, in any asset you could possibly get your hands on. Real estate, gold, stocks, tulips, doesn't fucking matter. Go look at it and prove it to yourself that every proper bull market is preceded by a long drawn accumulation that lasts months, years. Every bear market is preceded by a long drawn distribution that lasts months, years. Prove it to yourself. That's where you can start trading it. You can't trade something that somebody tells you because you don't have trust in it until you prove it to yourself. Unless you completely trust them 100%. Okay. Hey, Salty Tube. Thank you, Muhammad Abdurrahman. Dreamstorm says, overwhelming number of people expect BTC to front run every aspect. I hope you're right about alt front running. Yeah, everything has their own. There's no rule. It's like saying, it's like a bunch of people dancing in a dance hall and they're all doing the same dance. Are they supposed to all be choreographed? They could be doing the same dance, doing it in a slightly different way and spinning in a different way at a different speed, right? There's no like, oh, that's going to go first. Like, that always goes first. No. Sometimes this happens. Sometimes that person's doing that move and another person's doing that move, but they're generally doing the same dance and they're dancing to the same music. Sergio says, so based on everything you've said, safe to say November will be super bearish. I don't know. Again, just like I showed with what you saw with the US dollar currency index, just because the US dollar currency index crashed from January until present day, and it's at a low, a local market low, we still didn't see Bitcoin go to $1 million, right? There's a general trend that's a high time frame, and that could have showed you that Bitcoin was going to go to a local market top, but that's about all it would tell you. I'm just saying, keep an eye out for end of November. That's what I would say. November will be super bearish. For Bitcoin, yeah, but we already knew that. Yeah. Okay, so yeah, I think November gets a bit bearish for Bitcoin, specifically for Bitcoin. because it's in a, I mean, but that's not news. That's not news. Because we're at a local market top and we're about to break down, and we already have our first target at 90K. Salty2 says this chart is identical to Coin, which has been accumulating for years. Yeah, I mean, there's a lot of accumulation, but be careful. You have to identify completed accumulations, because you can look at accumulations that have been years in the making that still have one last pivot, and that pivot can take months. So be careful. Hey, Alpha, over, Alpha X. Anyway, all right. So that's the first part of my altcoin analysis, right? So the idea that let me clear this. Okay, there we go. I think I cleared it. All right. So that's the first part of it. I'm seeing altcoins break out of this. Let's go back on the 4-hour. Break out of this like triangle type thing, and then, right, generally speaking, altcoins are bullish. Again, that doesn't mean all altcoins, but altcoins based off of this other chart should give me signs of strength by taking this local market top next logical resistance and showing strength by going up and above ever so slightly, taking this 500-day resistance, which is a midline, right, of this 500-day channel, and going up ever so slightly and showing strength. That's kind of how the chart's telling you, like, hey, by the way, I'm gonna retrace, because that's what we do. Always got to retrace, because matriculations always have an expansion and a contraction. Everything in nature, expansion, contraction, your heartbeat, your breath, everything. So that's the expansion, that's the first move, that's the contraction, 62% golden mean. But I'm going to show you what's to come. See this 500 days? Yeah, fuck that. See that resistance? Yeah, fuck that. Next logical resistance? Watch that. I'm going to take it out, retrace, and then I'm going to take it out for good. Okay, so that's what I'm seeing with these altcoins. And then what you can see on chain, interestingly enough, is the same thing. Okay, so on chain, go on CoinGlass, free, pull up Model 2. I love Model 2. The altcoin liquidation heat map. So this is basically another indicator. It's taking the whole altcoin space, kind of like the other chart, and it shows you here exactly what I'm saying. If you look at this chart, you can see where we're at. You can see that triangle, right? You can see October 10th, the liquidation, or the cascade of liquidations, or whatever, the capitulative move down. And you can see that from there we've come up and we've shown strength in this triangle. And then typically, people like to say an SOS, as Wyckoff would call it, a sign of strength, is usually these intra-wave consolidations like triangles or bull flags, right? Triangles. This is what I'm seeing, what we've done since October 11th as, right? I know we haven't done shit since October 11th if you look at altcoins, but you should be very encouraged by the fact that you're doing this. This, to you as an analyst, should scream intra-wave correction. This is an SOS, or sign of strength, as per Wyckoff. And the initial move should continue. This is a retracement in time, as some people would call it. Instead of retracing all the way back, you can retrace in a shallow way, but by doing a long, drawn-out retracement. That's kind of what a triangle is. And the beauty about these intra-wave corrections is, so when we say a chart is imbalanced, it just keeps going up and there's no kind of retracement, and it's unsustainable, it's likely to come back down. This is the opposite. This enables market participants to join in the rally. So since the 10th, we're the 24th, right? So like for 2 weeks, anybody could have bought altcoins, the most bullish altcoins in the world, altcoins that have been down for 1600 days. You had an opportunity to buy. The market wasn't just roaring and screaming up. That's when I say, and I have this in my trading journal, markets are fair and balanced. Markets, for some reason, I don't know, it's a natural rule. They have to give you a chance. They always give you the chance. So this right here looks boring, but if you zoom out and you understand what's happening, the market's basically saying, hey, by the way, I'm not going back down there, but I'm going to give you a chance to join this rally, and this rally is going to continue up. So if you wanted to, October 10th, people are like, oh man, there was no chance. CZ's such a crook. It just liquidated me and my orders didn't fill here. Market says, don't worry about that. I got you. I'm going to give you 2 weeks. 2 weeks to buy. And if you do, congratulations. I'm also going to give people 2 weeks to decide to sell because they can't read the chart and say, you know what? I don't know about this. It's going to go back down. The market's giving you a chance. It's 2 weeks. It's a consolidation in time. And also, it's unlikely that price in bullish assets go anywhere below this ever again. In bullish markets. Okay? So that's the balance in the market that you're seeing right now. And you can see in the liquidation data right here below us, there's nothing. There are no orders below us. There's no reason for the market to ever go back down here. Again, this is an altcoin indicator that's showing you the general altcoin space, and the general altcoin space is bullish. Yes, a lot of bearish altcoins, but by and large, most altcoins have done nothing for the past 1600 plus days. That's changing now, and this is the move. It started on October 10th, and this continues up. Where's the next logical resistance on this chart, right? Where's the next pocket of liquidity of note? It is above your next logical resistance, which is this top here, right? Or on October 4th, 5th. It's actually above what you saw on the 18th of September. It's around here. Again, go back to your actual TA. It'll show you the same thing. So October 4th, 5th, this is that high right here, okay? That's your first inkling of a liquidity pocket. September 17th, 18th is here. Your liquidity pockets are over here and actually above that. So don't be surprised if the liquidity for this altcoin move goes all the way to whatever happened on the 12th of August, right? Again, 12th of August, zoom out on your chart. 12th of August, that's around here. And basically, what my on-chain data is telling me is expect these highs to be taken out, just like my chart says. Expect the 12th of August, 17th, 18th of September, 4th of October, those highs, that head and shoulders bearish reversal pattern that played out, right? That rounded top, expect that to be taken out. Expect the market to show you that you're not going to create lower lows, but a higher low. You're going to change the trend of the market. This is what this liquidity data is telling me right here. So I think that corroborates our technical analysis. Last but not least, this stream is already quite long. We're very, very, very much encouraged by what we see in Bitcoin dominance. Again, this is the definitive indicator telling you that you're going to get a massive move in altcoins, right? So the idea is this. Bitcoin is constrained very likely to the high of 116, right? There's staunch resistance of a 100-day channel at 116. That's a 5% move from where we're at, right? So I'm telling you that altcoins are supposed to move 50% when Bitcoin's only moving 5%. That doesn't make any sense. For the past 1600 days, I've seen the opposite, Dean. That doesn't make any sense. And I'm telling you, this is what this chart is saying. This chart right here, this Bitcoin dominance chart, is telling you expect a major move of altcoins against Bitcoin, of altcoins gaining much more than Bitcoin's gaining, because this right here, this rising wedge, is finally breaking down. And again, the rising wedge that you're looking at is within context of a trend. That trend is down, and it was established beginning October 10th, just like our altcoin chart showed us. Okay, October 10th, you got that retest of the midline of our 850-day channel, and then you got your first interwave correction. This is your second interwave correction. You should expect, with a high degree of probability, a continuation of the trend to the downside, breaking this long-standing support here, finally, to the downside. Okay, this is a massive head and shoulders pattern that I see. Okay, so that's what this chart is saying, and on the smaller time frame, it's looking very encouraging that this rising wedge is bearish, as most rising wedges are, and that it's currently breaking down and should give you that 50+% move in altcoins as we've calculated on the others chart. That's pretty much the analysis for today. It's a bit long-winded because there are a lot of sort of detours, but that is what I wanted to convey. I'm going to look for any last questions here. And if there aren't any, we're going to sign off. So let's see. Okay, cool. That's pretty much it, guys. I hope this was helpful, useful. Like, share, and subscribe. If you got value, consider joining my crypto portfolio mentorship and consultation service, where we go directly into the specific altcoins that we can expect should pump. And Adrian asks, can you analyze Supra USDT, please? No, Adrian, I don't do any altcoin analyses anymore. I haven't done that in many years. I'm only doing that exclusively in our crypto portfolio mentorship and consultation service. Just look in the description of the video and you can see how to sign up for that. And if you're only interested in one asset, you can order the single asset analysis service. It's much cheaper, and it's pre-recorded. It's not live with me. You don't have continuous email access. You can ask some follow-up questions, but essentially you pay the $120 fee. Email me whatever you want me to look at, and I'll look at it, high time frame, small time frame, whatever I think is relevant, and I'll send you that pre-recorded analysis within 24 hours. And then, like I said, you can ask some follow-up questions, but that's pretty much it. Yeah. Dreamstorm says many sold during this past 2 weeks. They are the ones in comment section screaming it's over the loudest. Psychologically, they need the market to crash so they don't have to buy back higher. Yeah, you always seen that. Every market phase has buyers and sellers. It's just, can you determine which one's correct? And when you're in consolidation, when you're going sideways, everybody loses, because you're basically going sideways and you're chopping. The buyers suck, the sellers suck. Nobody's doing anything of note. You're just going sideways, and that's a consolidation. That's consolidative market. Both buyers and sellers are angry, but there's a phase where the buyers are really happy, and then there's a phase where the sellers are really happy. The buyers are really happy in a bull market. The sellers are really happy in a bear market, in a trending bear market, in a trending bull market. Yeah. Sergio says, thanks again for your time. Anytime. Glad this was helpful or fun or whatever. All right. Bye, y'all.